Trading update with me, Petra Munnelly. Want to update the S&P 500 view using the E-mini futures contract and look at some potential action areas for the trading week ahead and some price objectives that we can look to target. Before we jump into the technical picture, let's review where we are in terms of the macro side of things. It's a pretty light week as we start out the week here on Monday and heading into Tuesday. Not much on the slate. We get some Fed speakers, Daly and Kugler. And then heading into Thursday and Friday, things pick up on in terms of the US side of things with jobless claims, retail sales. We also get an ECB rate decision. And then heading into Friday, we hear from more Fed speakers, Bostic Ashkari and Bostic again on Friday. And so it's a pretty light macro week in terms of headline risk. Obviously, we still have heightened geopolitical risk and the potential for headlines coming out of the Israel-Iran conflict, potential retaliation, and the implications of that could develop this week. So I want to keep one eye on certainly on the wires as we go through the week. Turning to the technical side of things. On the weekly time frame, we are pushing up into the 2 and 3 standard volume weighted average price volatility bands, and we are also testing into that 1-2 decline that we saw through July and August, which targets a move into the 58.98 handle. Also coincides with the top side of this developing wedge scenario. Moving to the daily time frame. We have an estimated range for the week, given implied volatility from the options market, of about 88 points either side of the close on Friday. So that would put us up into 59.49 on the top side there, and to the downside 57.73. I'm still tracking a fractal pattern in terms of similarities that we saw into the peak in July and the August decline. I've overlaid those from the breakouts of last week's highs through that 58.30s, and we're pretty much tracking that at the moment. You'll note that if we replicate the same advance from the breakouts that we saw in early July into that late July peak, that would actually put us into that 59.40s target zone. So I want to keep an eye on that level. It's also an equality objective versus the largest swing structure in play at the moment, and those 53.90s swing low, that gives us 59.39. So ultimately, we're looking for something into this 59.30, 59.50 to act as some resistance on the higher time frame. So keep those levels in mind, and certainly the implied volatility moves are always a very useful reference point. And you will note that we still have significant momentum divergence developing and in play. So all those factors lead to the potential, I feel anyway, that we could see a local top develop into that 59.30, 59.50 area. Again, this is just a tradable corrective move. I'm not suggesting any type of market crash or anything like that, just a tradable resistance area that I'm going to look to lean against. Moving to the weekly setup in terms of where we are in the weekly plan, I'm using bull bear zone this week of 58.38 to 58.28. So any pullbacks into that area, I will use as support, watching bullish reversal patterns there to engage on the long side. The first target area is going to be a test of the 58.92, which is the daily projected range resistance, into the 59.02 level. I would anticipate then a move into that area as long as we maintain momentum divergence, i.e. we make the new high in terms of price, but fail to make new highs in the momentum study. That could be the setup for this pullback into the bull bear zone for the week, and then I'll watch for bullish reversal patterns there to engage on the long side, ultimately then looking for that test up into the 59.30s, 59.50s, where again I'll be looking for bearish reversal patterns with added confidence from momentum divergence to engage on the short side. Ultimately, then looking for a break of the bull bear support, going to move down to test the high volume area from the balance profile that we put in place throughout September and early October. So that will take us back into take a look at 57.80 to 57.70 on the downside. So those are the levels that I'm using as we start out the week. Obviously, trade levels and positions will be updated through the trader chat, but that's where we stand as we start the week. As always, traders, plan the trade the plan, and most importantly, manage your risk. Until next time, thanks very much.